When PayPal reported their earnings this morning, I took a look at them and it frankly put me back to sleep. And so I wasn't going to come in here and do a video on PayPal earnings, but seeing the shares down nearly 13%, I thought, hey, might as well take a look at PayPal after they reported their Q4 results with revenue growth, transaction margin dollars, and total payment volume all basically growing in that slow single-digit range. It's nothing really all too exciting going on over at PayPal, but look, management, to their defense, did guide for this type of growth moving forward over at PayPal, but to their credit, at least they're going to focus on profitable growth. So we'll take a look at PayPal. What is sending shares down nearly 13% on the day? Is this perhaps an overreaction by the market? Maybe there's some things in these results that the market doesn't fully understand, or maybe they're not fully caught up with, but maybe there's also some things that you should be concerned about with PayPal, maybe on their take rate, maybe on the expenses side. We'll also take a look at the guidance, not just from an earnings perspective, but also from a buyback perspective, which is probably one of the biggest reasons why you would buy and hold shares of PayPal moving forward. Now we'll also take a look at it from a technical perspective, as shares have been breaking down more recently. In fact, this 13% sell-off today was a huge sign of reversal and maybe a sign of potential, maybe downside over at PayPal that is yet to come. Hey guys, hope you're doing well out there. It's probably been a while since we've taken a look at PayPal holdings, and you're basically sitting smack dab in the 52-week range for this one. Now, over the past 1 year, you actually had outperformed holding shares of PayPal. Now, with this nearly 13% decline today, some of those gains, in fact, a lot of those gains have been wiped out. So you're only up 26%, basically keeping up with the market over the past 1 year. But again, you stretch it out over 5 years, depending on when you got into shares of PayPal. If you hold this one, you could be significantly underwater, or you could be up on shares of PayPal if you sort of dollar cost averaged throughout the lows that this company saw. Now, Q4 revenues came out with revenue growth of right around 5%. Again, I tell you what, we'll go through these earnings rather quickly because it might put you to sleep. PayPal gives you a lot of different metrics and analytics and different numbers. We'll go through the important ones that you need to know. So of course, revenue $8.4 billion did meet expectations and exceed them on the top line. You also exceeded expectations on the bottom line by right around 7 cents. Now, the important figures over at PayPal are the total payment volume. This is basically telling you the overall market share. You could also say it as the overall total addressable market over at PayPal, which is again massive based on the number of e-commerce and online and peer-to-peer transactions that happen. But you saw your total payment volume grow roughly 7%. The other important thing is the transactions per active account, basically the number of people using PayPal. Are they using it more and more? And that grew roughly 3%. So still growth, but very small growth. And again, you're not seeing rapid 10, 12, 15% growth like you once saw with PayPal. That's one of the reasons why shares continue to move up so rapidly during the pandemic, is because PayPal at that time was growing really, really rapidly. Now, they did give guidance on the EPS side for not just this Q1, but also for the upcoming full fiscal 2025. In terms of EPS guidance for the current quarter we're in, came in ahead of estimates at the midpoint, right around $1.16. And then for the full year, also came in ahead of consensus estimates by right around, take at the midpoint, $5 smack dab. And so look, $5 of earnings for a company worth $77. That's a pretty good price to earnings multiple. So you're not trading overly expensive over at PayPal anymore. You pretty much used to at one point, but over the past, your earnings multiple has compressed significantly. Now that is for good reason. Your growth rates have also slowed down a lot, but still you're making a profit, and you're making a pretty sizable earnings per share profit over at PayPal, and significantly higher than what they once used to, considering the fact that the focus is now on profitable growth rather than simply just growth. Now, again, you look out into the couple of quarters and you're expecting mid-single digit growth at best over at PayPal. So the upside for this stock is, look, if they can come in with 6% growth, 7% growth on the revenue side, which again, isn't all too exciting when you're looking at companies like ServiceNow and Palantir and SoFi and all these other high-flying tech names that are growing rapidly. Look, 5, 6, 7% will put you to sleep, but it's all in relation to the expectations. For a Palantir now, the expectations are sky high. For a company like PayPal, expectations still remain relatively in line, relatively low. So if you have new management, Alex Chris over there, having been there now a year, if he can accelerate growth rates back to 6, 7% over the next few quarters, you get in closer to the high end of these estimates. Well, that is upside for PayPal, considering the valuation is pretty much down as low as it, in my opinion, should get. Now, in terms of the total active accounts over at PayPal, this was one of their big knocks during the significant sell-off that we saw in shares of PayPal pretty much throughout 2022, throughout 2023 as well. was the knock on this active accounts. They were declining pretty much throughout 2023. And so now what we've seen is we saw Alex Chriss step in at the end of 2023. And since then, you've seen a steady tick up in your total accounts, total active accounts. You're not seeing huge explosive growth, but at least you're not declining on your active accounts as well. You're not staying flat. You're continuing to grow on those active accounts. They're also growing on the monthly active accounts as well. And like we said, they are growing on the total payments per active account as well. So not only you have more users using PayPal's products, you have them interacting with them, transacting with them more often on a monthly basis. Now, the important thing, I think one of the reasons why you're seeing shares sell off so significantly on the day is because you have this PSP unbranded card processing. So if this is the first time you're looking at PayPal, they have a service called Braintree, which is sort of the back-end payments rails for a lot of different e-commerce sites. You probably interacted with Braintree at some point or another without knowing it. You also have a lot of enterprise customers using Braintree. Now, again, Braintree doesn't say PayPal, and so it's considered unbranded card processing. And so that unbranded card processing comes with very low margins. Now, in the past, Alex Chriss, again, part of PayPal's relatively new management, did say that they're going to focus less so on growing the PSP or the unbranded card processing or Braintree, whatever you want to call it. They're going to focus less on growing it fast, but making sure they're growing it profitably. And so you might see the growth rates on that business slow to a screeching halt pretty much from 29% growth last year to now just 2%. And so that's why your overall total payment volume is growing at just 7% compared to 13% last year. And so look, when investors who maybe haven't kept up with PayPal over the past couple of months are seeing this, that whoa, growth on the unbranded card processing, which makes up a huge portion of this business, is basically screeching to a halt. Well, that's a bit concerning. And look, it is concerning in terms of growth rates, but PayPal is in the process of renegotiating a lot of these merchant contracts, a lot of enterprise contracts on the Braintree side. And so they're getting rid of a lot of those contracts, which are making them grow unprofitably on that Braintree side. So look, you won't expect huge growth on the Braintree side moving forward, but you can probably assure that it's going to be more focused on profitable growth, where they're also growing the bottom line along with the top line. And then in terms of other segments, that's relatively in line. Branded checkout, which is, look, pay with PayPal, the PayPal button that you see online. You also, I think, have pay with Prime now on PayPal service as well. So that includes branded checkout, and that accelerated growth from 5% up to 6%. You're also seeing acceleration on Venmo, acceleration on peer-to-peer excluding Venmo as well, and then other merchant services growing pretty fast at 27%. PayPal is certainly focusing on bringing more value-added services, similar to what Visa, MasterCard do for their merchants. PayPal's also trying to integrate more merchant services to have those merchants continue to use PayPal, not just for transactions, but for other value-added services as well. And then now they're slowing down the hit that they're seeing from the eBay side. So look, the important thing to note is you have Braintree growth rates beginning to slow, absolutely no doubt, but at least they're growing profitably moving forward. And maybe in 2026 beyond, you should see that Braintree growth rate once again begin to accelerate. Now, like we said at the top, PayPal gives you a lot of these different metrics. The important one to note is the total take rate or the transaction take rate. Both of these did increase quarter over quarter, and so you're seeing a sequential gap up, but you are seeing them down year over year, as your total take rate last year was at 1.96%, this year down to 1.91%. So this is not a trend you want to see with PayPal. You want to see year over year growth, or at least maintaining that total take rate, but you are seeing that sequential improvement at least. So that's a good sign. It's something I would keep an eye on for PayPal moving forward. Now, the other important thing with this company you get is a buyback. Look, they're very free cash flow positive. It's one of the reasons, if you're bullish on this name and if you're invested in this name, one of the reasons why you can continue to hold. Also, one of the reasons why the valuation is relatively low is because, look, this company is still profitable, and a lot of that profits go straight into buybacks because of how much free cash flow they can generate. And so they announced a new $15 billion stock buyback. That's in addition to a nearly $5 billion that's remaining on the current authorization. And look, this company certainly does execute on those buybacks. We'll take a look at that when we get to the cash flows. But again, you have nearly $20 billion worth of authorized buyback for a company right around $90 billion. So look, that's a huge percentage of shares that PayPal could possibly take off the market over the next couple of years, especially if the stock continues to trade around this range. And so look, if you're a long-term bull on PayPal, you hope for dips like this. You hope for PayPal to continue to buy back shares at a relatively cheap cost. And then maybe when growth rates accelerate, that's when the market will fully realize the potential over at PayPal, at least from an earnings and a cash flow perspective. Now, from their balance sheet, we'll go through it relatively quickly to save you some time. You still have plenty of cash over at this business, nearly $10 billion in cash and short-term investments. You also still have long-term investments. A lot of investors missed this line over here with PayPal. So you have nearly $15 billion in cash, short-term and long-term investments. And then in terms of debt, you have right around $10 billion in long-term debt. So look, you have more cash than debt on the balance sheet. Nothing overly exciting or nothing overly crazy from a balance sheet perspective, but still maintaining more cash, which is a good sign. Now, you saw that revenue growth of nearly 5% up to $8.4 billion. What's impressive is you didn't see nearly as big of a jump on your transaction expense. Generally, this tends to increase pretty lockstep with your revenues, but you actually saw transaction expense controlled relatively nicely. Transaction and credit losses did jump roughly 10%. But the important thing to note here, though, is you saw a pretty big jump up on your sales and marketing side. So you went from 450 million up to 620 million on your sales and marketing side. Look, which doesn't seem like a big jump, but for a company that's growing top line by just $300 million, you grew your sales by nearly $200 million. And so that's a pretty big jump, at least on a percent-wise, even on a dollar basis on your sales and marketing. And I think that's one thing why investors are concerned sending shares lower, is because you're seeing that huge spend on the sales and marketing side. Now, one thing to note is that's not something that occurred during the first 3 quarters, as you're seeing a $200 million bump up on your sales and marketing for the full year along with this quarter. So a lot of that bump up did come just in this quarter. So maybe that's one thing that PayPal were saving. Sort of their Q4 budget, at least on the sales and marketing side, tends to be a bit larger. But look, you wouldn't want sales and marketing to grow this rapidly, especially when your revenues are growing at just 5%. Now, your G&A also relatively flat, but what that sales and marketing jump will do is it eats into your operating income, and so you see operating incomes down for a year-over-year basis, down to $1.4 billion, translates pretty much dollar for dollar on your net income line. Now, from a cash flow perspective, things still look very, very good over at PayPal. We come down here straight to operating cash flows of $2.4 billion for the most recent quarter. They don't have a ton in CapEx. Pretty asset light business, and so for the quarter you're looking at roughly $2 billion in free cash flow, and well, they execute on that buyback pretty much to a T. And so for the full year you saw nearly $6 billion of buyback over at PayPal, and what they guided for fiscal 2025 is also $6 to $7 billion of free cash flow, and accordingly $6 to $7 billion in share buybacks. So really that's one of the reasons why you're continuing to hold shares of PayPal, because they generate that cash flow and they pretty much have no other use for it other than to buy back the stock. Now, from a technical perspective, shares were in a pretty well-defined uptrend, and then you broke up from it pretty significantly, and you were making sort of a steeper uptrend for a while there. But now with this most recent move, you've pretty clearly broken through that steep uptrend. And so in terms of levels of support, you actually have a pretty decent level of support, basically $1 underneath where you are right now. I mean, you don't want to break 76.50 because you don't have another level of support really until you come down to the mid 60s, down here at $66, $67 a share. So one thing I like to do when you don't have a lot of levels of support is you throw on a fixed range volume profile, basically throw it on and you see where the volume is in terms of buying and selling shares of PayPal. You have some volume up here, but again, if you break through pretty much the $76.50 range, you don't have a lot of volume here until you come back basically in the $66, $67 range. So what I could see is if PayPal continues to move down even just a little bit more, you could see shares rapidly come back here in the $66, $67 range, basically entering this uptrend once again, stepping into the middle of the range. So look, if you're ultra conservative with PayPal, maybe you're still up on shares if you've bought in at these low levels. If you want to preserve your profits and don't want to see them get wiped out fully, you probably have a stop loss. If you didn't get stopped out of this one already, probably have a stop loss right here at 76.50, because if you break that, again, you're coming in here where the volume is, down here in the mid 60s, probably re-entering this uptrend once again. If you enter all the way back here in the low 60s, I think that's a point where you can continue to buy shares of PayPal, as the uptrend still probably will remain intact. The fundamentals certainly stay relatively stable. You don't have exciting growth over this company anymore, but you certainly still have profitable growth. You have huge free cash flows. They're continuing to buy back shares. They pretty much don't have any other use for that cash. So from a technical perspective, I could anticipate more downside if you break through the $76.50 range. You're probably coming in here into the mid 60s. That was my take on shares of PayPal. Let me know your thoughts on this one in the comment section below. Certainly not exciting anymore, but you still have kept up with the markets. You were outperforming until today, and I think you could still continue to outperform, especially if management is able to accelerate revenue growth in any meaningful way. If you're also watching shares of PayPal, they have an investor day coming up later at the end of the month, so be sure to check that out. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.